Welcome everyone. Excuse me. Right, Happy New Year. Hope you had a very good time. My name is Mike Hamilton from Trade the Easy Way. And I'm just going to do a very short session here just to pick my way through what we've seen year end and what we can expect in the new year. And I'm very, very focused on what the dollar's doing. And so this dollar index on a daily chart is falling. So if we continue to fall here and continue lower, that is good for gold, good for commodities, and good for the markets. If, however, this turns around and picks up above 10.5K, then watch out. So this, any kind, particularly a decent recovery in the dollar could have major impact on the ability of the markets to sustain these levels. So this week alone, we've got December jobs on Friday. So we talked last Monday about what might happen in 23. I think we are still due more rate hikes. We've got 4.5% in the US. We could easily get to 5.5% in the first half of the year. If that then triggers a recession, we might pull back. Right, are we going to head for a recession? Good question. Here is the spiders, S&Ps, on a daily chart. So you can see I've got this 5 and 3 wave. Let me pull that out. 5 and 3 wave move plotted from January 22. So January 22, we already just came off the edge and did a 3-wave corrective move into support. And then once we had the earnings season underway, we had a proper 5-wave move within that wave 3. So you can see I've got a 1, 2, 3, 4, 5-wave move down there. If this is right, and so that's the completion of the 5-wave, and we're going to ABC move into 4,000 or potentially 4.2. If we then fail at that point, then watch out. I think we can really tip lower. If we fail at that point, I think we could easily find our way down to 3,000. I've got 3,138 on this S&P extension. So I think we can find our way down to that level there. In fact, if I shift this lower to that C wave, you can see 2985 is an ambush support there. If I just mark that, 2985 down there. So I think that's the kind of levels. If we do not sustain these levels and crumble at these pivot points, then that's what I think we will see into next year. Quick look at the FTSE. So the FTSE was in quite a tight range last year. We came down to those lows in March and eventually dropped back just under those lows and then picked up in the middle of October, only to find ourselves sitting underneath all this resistance in the year end. So DAX was open today. It's not a holiday in Germany, and they got quite a decent lift into the open. So if the FTSE finds itself above this 7550 and ultimately above 7700, then we're going to go to these extensions. If we crumble here underneath this, the might of that trend line, then get short and stay short, because we're going to come and find these lows and potentially go and find 6,400 and 6,100 is right down there. Okay, so we're in this little apex here. So if that, whatever way that FTSE comes out of that apex, is potentially the underlying trend for at least the first half of the year, at least. I'm going to keep this nice and short. So gold, we're coming up on volume. The volume bars are increasing. So any pullbacks to 1790, 95, we look as if you may not see it, but at the moment we look as if we're going to head for 1850. Next stop is 1900, and any subsequent pullbacks on that should take us to 1970 plus. If we get really bullish, and if I pull right back from this, in fact, let's go to a weekly. If I pull right back from this, if we hold above this 1850, 900, then we could, I've been predicting 2300 for quite a while. In actual fact, I thought we might even see 2300 last year, and we didn't. We've pulled right back to this 50% 1600 support. So again, the first week is going to be important. If the jobs number on Friday comes in and to the which is to the market's liking, then you may only get shallow pullbacks. But I would love to see 1725 would be great. Anything lower is a gift. It's a significant push up here on this last move from 1620 area. This is a weekly chart. So let's go back to the daily. So yeah, let's just see how this first week unfolds. But any pullbacks to at the moment, 1780 is a daily trend line. So any pullbacks to that level are viable, I think. Oil's not that far above the last year's starting point, literally about 400 or 500 pips off last year's starting point. So we've got this huge trend line coming in across these highs from June highs and November highs. So it's all about this 80, 85 level. I think we will see, traditionally, oil will pick up in the early part of the year and peak around that March, April time, and all the contracts are in for the summer dry season. So my guess is we're going to come up back up to $100 a barrel. Can we go higher than that? Yeah, sure. If we punch higher on volume, definitely. But I'll be watching. In fact, I'll be boxing this area here very early on, because I think whatever direction we see coming out of that box is going to be oil direction. So yeah, coming back to what I said about the dollar, if the dollar continues to fall, then that bodes very well for oil. If that dollar stays low, then I can see that punching right through 85 and getting to 100 fairly quickly. So look at silver. Silver is an industrial stock. This isn't updated, so let me just update this. Thought I'd updated all my charts, but missed this one out. Right. Okay, so 25 is an obvious major resistance point for the silver. It's been on a really nice run from that 1762 area. The trend line would take you right back to 2222, because we've already got close to this trend line resistance. So any strength in the dollar and any dip into 22 is, in my book, viable, and I would expect that to see at least 32 plus, maybe as high as $35 or more if that breaks out. If this breaks out, the most recent high was 30 up there in February 2 years back, nearly 2 years. Yeah, so a very ambitious target will be $35, 40. Otherwise, we do look at this stage, we do look as if we can see 30 in the first half of the year. So that bodes well for the miners and energy stocks. But yeah, let's keep a very close eye on the oil. So Pound. I think this pound, if we close on this 120, I think this is toast. So we got that resistance. So we're sitting at this 121 or just under 121. So close under 120, and we're going to see these lows again and potentially 93. If that dollar really catches a bid, it is possible we go right into 93. The UK, of all the G7, the UK is forecast by far the weakest GDP levels. We did escape the R word back in last year with above an expected growth number. Right. So let's take a look at the euro. So the euro's had a decent bounce. That is a much stronger bounce than the pound, much stronger. So if I take a look at this one as well, just comparing year for year. So you can see a lot of these markets are at pivotal points. Surprise, surprise, as we just get 23 underway. So if I would have thought we'd kind of see 105 on the euro. If that holds, well, then we could ping up back up to the 21 high, 22 highs. So if I color code this, close above 107, I think we can go back to 22 highs, close underneath 105, and then we're going to start heading down and fall back to potentially under parity on that one. Let's look at Bitcoin. Don't have to look at Bitcoin. Let's do that now. Yeah, so November 21, I predicted that we would fall to these levels. Now what can I predict? Mainly, I predicted these drops mainly because of these gaps. It was a gap prediction as opposed to a simple fib prediction. So 17,700 is a fib level. So if this is a bearish consolidation in Bitcoin. So if we stay underneath this structure, this price structure, I think a lot of people are predicting 10,000. I wouldn't disagree with that at this rate. We're very close to 10,000 anyway. So I think any pop up into this 18K mark could see us drop back to at least 10. Technically, we could even go under 10. Technically. I would scrap that if we find ourselves above that 18 on volume. Look at the way the volume is dropping off. So we're falling on lower volume at the moment. So the fact that this price is not supported means it could break these lows, so easily break those lows and come lower. Have we got any crypto fans in the room? Any crypto fans? Okay, my other real thing for this year, I think these commodity markets are primed for another big move. So anybody who knows me, you know I'm a huge fan of the grains. We've already seen a decent move on soybeans here. So any pullback to $14 on the beans. I think we are going to see 20. There's various ways you could trade these. You do not have to use a lot of leverage. You could use some of the Wisdom Tree ETF funds or investment funds. Wheat, same goes for wheat. We've already pulled back to 7.35. We're just under the $8 mark. Any pullbacks, any strength in the dollar that drags this down is going to find me as a buyer. I think we're going to go at least back up to $13, and I would expect to see $15 this year. I think we're going to go up and see that extension of $15. I'll happily change that prediction if we stay under 7, but I don't think we're going to do that. That's my prediction. Right. Out of interest, I've just seen that natural gas has really fallen wayside. So if we come down to the 4 mark, this 40 mark, then I would, this is seasonally, you normally need to wait until April, May for this. So I would just back off the gas, but I think that could creep right back up if we see a decent pullback. Again, look at the volume. We're coming down on volume. So the market is not finding buyers for that one at the moment. So that's one for the spring. The typical seasonal time to buy gas is the spring. Right. What else have I got? Coffee. We're seeing a pickup in volume on the coffee, so I'm going to keep a close eye on that. But I love these commodities, and you can buy general commodity funds, precious metal funds. You don't have to buy a specific, and so on. Right, let's look at, have we got any stock traders in the room? Any bear raiders in the room? What I'm looking for on this card factory is looking to see if this, I think this car factory can drop. We've come back into a lot of resistance, so I'm going to be shorting. It's come up here on low volume, so I'm going to be looking to sell card factory and see if this can pull right back to 50, maybe even lower than 50. I think that's got the potential to come back to that breakup area down there. So I would short into 78.80 with a stop above 82. And then I think that one can fall right back. Otherwise, if we look at the UK bellwethers, rather than me do, let's look at things like BT. This is a pretty pathetic looking stock at the moment. I think this is seriously undervalued, but the market is at the moment dragging it lower, so I'm not going to start buying this. But BT is on my list. I think this is a takeover target, and the OpenReach side of it is worth more than this alone. So I think this is a good value stock. But I would need to see that stay above at least 115. Otherwise, that is lower. Vodafone was really beaten up last year. I'm keeping an eye on these lows. The banks sort of finished at their sort of mean average, which is not uncommon. So again, volumes have been dropping off. That came up on. Sorry, I'm trying to grab the pen. That came up on increasing volume there, but quickly fell off, and then we came down on selling volume. So if we don't sustain these levels and break that support, Barclays is going to be coming down to these back to those low levels as well. Did we look at Rolls-Royce? I can't remember. Rolls, it's come up on lower volume. I'm not impressed with that volume at all. So I think that's debatable. We're going to find out very quickly if this one is going to hold up, because if we break this little trend line support down there at 88, then Rolls-Royce is potentially going to come and see last year's lows. Right, anything you want me to look at? Because I want to keep this nice and short. This is a good defensive stock, QQ. They are in IT, antivirus and defensive industry. I think this has had a good run into 370. Any pull back into that support, particularly 340, I think is viable. That had a really nice run. If you look at how it ran last year, yeah, this dip tipped right back into February, did a 3-wave correction wave here into February. So you got a 1. It's not this okay, this tool is not very good. Right, I'll draw it manually. You can get a 1, 2, 3 wave into a breakup area, and then you go on a really nice 1, 2, 3, 4, 5 wave move with a 1, 2, 3 corrective wave. So if this wave 1 is already underway, then these pullbacks into these areas on this QQ are to be bought. If we see a pullback into something like 348, 340, and the volume picks up, I mean, I think that is a good start. It's a good performer last year. So we peaked just under the £4 mark. We've recently been to 322. The most recent high is 370. I think that is, if I pull back, you can see there's a potential bull flag. Right, you're all very quiet. So at this time of the year, I'm just literally just planning. I'm in planning mode. I want to get this market open. I want to get the monthly jobs out of the way on Friday. Short term, I am buying dips in gold and oil, and I will be looking to buy dips in these indices, but just looking to see if if these indices are sustainable, and particularly the S&Ps and the FTSE, as we get open, and see if that prediction works. Right, okay, I'm going to leave it there, unless you've got anything else you want me to look at, any other questions, any particular market you want me to look at. Now's your chance. Chuck it in the chat box there. You can see the chat icon. Otherwise, I'm going to call that quits. Close down my PC and then just sit back and watch these markets in the next day or two, and particularly looking for the where we finish on the week and the end of this week. Brilliant. All right. Well, thanks very much. Dow New Year rally. Yeah, at the moment, I think we've seen a decent push up in the DAX. So this is poised for a push higher. Short. Yeah, I think it looks as if we can see 35k on the Dow. Yeah, that's not quite. It's a decent move. It's not necessarily a rally, but certainly a push higher into the open. So all the time we sit above 32, 33, we are higher. I think we're underneath the 50-day average. Yeah, we're under the 50-day average. Any market that cannot get above the 50-day average has the potential to close lower and go lower. So we've got to get above 34 quickly, and ultimately we've got to hold about 35 if we're going to expect more. You can see this channel. So we peaked above the channel in August and then dropped right underneath the channel into October. So another push into the channel high resistance and a close lower on volume. And the top of this channel could see this market drop back. Yeah. Brilliant. All right. Thanks for joining me. And I am going to be expanding these sessions as time goes on. So do make sure you come back next Monday at the very least. If you're not in my Telegram room, shout now. Otherwise, have a good week, and I look forward to, I'll be going through much more comprehensive details next Monday, particularly once we get the US jobs out of the way, and there'll be more to talk about then. Brilliant. Thanks very much. Have fun. Happy New Year. See you then. Oh, Telegram. Yeah, right. Let me just grab that. The Telegram app has got more up-to-date alerts and information. Just send you the link. I always struggle to find the link on this. Hang on. Ah, got it. Got it. So that takes you into the Telegram app and my, yeah, sure. Yeah. Let me just, do you want to do that in the group or privately? Do you want to ask something about the markets or what? Let me just find you and put you on the unmute. Right, okay, well, if you want to talk in the room, let's talk here. Can't do it. Hang on 1 second. Let me just work out how to do this. Maybe it's all the security I put on. Hang on.
Hello.
Right, you are free to talk now. You are, if you've got a microphone set up, then yeah, you can talk away now.
Can you hear me? Hello.
Oh, sorry, I've got the sound off. Bear with me. Sorry, you are talking. I've got the sound off. Hang on.
Hi.
Right. Hi.
Can you hear me?
Yes, I can.
Oh, great. Nice to meet you. I wanted to speak because I think you said in your profile you've been trading for a long time. Can we talk about emotions, controlling emotions? Just wondering what your thoughts on that are on that.
Hang on, so I've got a lot. I'm getting feedback here. Yeah, so am I right in thinking you're asking me about the emotions?
Controlling emotions.
Okay. I think it's good. Sorry, I think it's going to be best if you type it in the room because I'm getting a lot of feedback here. Okay. So we're talking about the emotional side, the trading psychology. Yep. We're asking a question about trading psychology and managing your account.
Yeah. Yeah.
I'll put headphones on next time so I don't get that feedback next time. I know what I can do. Hang on. Apologies. Controlling emotions, right. Okay, if you're sort of putting that in the context of risk management, then I would enter these trades with stops underneath these support levels, but I would do it in a position size that is not going to harm your account. So there's several aspects of that question you're asking about. It's about, first and foremost, it's about sticking to the technicals. You know, the more technical you are, the more you stick to the technical rules, the better. So that's one side of it. So you've got to ignore the noise. There's a lot of huge amount of conflicting information out there at the moment about some people are saying we're going to get, we're in, well, in fact, the IMF came out over the weekend saying, I can't remember the statistic now, something like a quarter or half of the developed world is going to be in recession in 2023. And I was listening to an American fund manager. She heads a lady called Kathy Wood. She heads a big, huge, very high profile tech fund. And her take on 2023 is that inflation has peaked. Inflation will drop hard, and the Fed will not need to raise rates at hardly at all from where they are now, or possibly even reduce rates. And she's incredibly bullish for next year. So there's all sorts of conflicting reports in there. So I think the best thing, or the thing to always do in these circumstances is always have a trade plan and stick to your trade plan and completely take the emotion out of it. If you I'm sorry, hang on. If you take the emotion out of it, then you can so I'm trying to do something else here. If you take the emotion out of it, then you control your emotions. So it's about trading in the right position size. Yeah, okay. Let me just, I think I've found out a way of doing this, right? Yeah, I found a way to, okay. I've sorted out my audio now. So I'll put you back on speaker. Hang on one moment.
Hi.
Hi.
Is that more clear now?
Yeah, that's better now. It was my fault. I've worked out how to stop the feedback, so I can hear you clearly now.
All right. I wanted to talk a bit more in depth about emotions. You
Okay.
know, for example, it's about fear and greed. So normally, I mean, everyone has emotions. A lot of traders I found they're very emotional. They all admit they're very emotional. Um, I mean, I suppose if you're a very cold person, like you're, but not everyone is. So the thing is, like, when you put in a position, I think the main problem with maybe newbies, or maybe even not so much newbies, even professional people, as soon as it goes into profits, you become fearful and you close it in a small profit.
Mm.
When it goes into loss, assuming you don't have a stop loss, which sort of, I don't use a stop loss, I know it's wrong, but when it goes into loss, instead of becoming fearful and close it quickly, you suddenly become as cool as cucumber. You let it run. But sometimes if you're day trading and if you're maybe scalping, you know that there's a good chance it's going to come back anyway, and you close it as soon as it comes back. But the thing is, your feelings are opposite of what it should be. So when it goes into profit, you should not be fearful and not close it early. You should run it, but you don't do that because you're fearful, because you don't want to lose that profit, even however small it is. You close it and you don't run it.
Okay.
And when it, so everything, your instincts is the opposite of what it should be. So to overcome that, it's a bit like saying you have to go against your own instinct and you have to
Well, I
change
think the
who
whole
you
of
are.
I mean, trading as a whole is counterintuitive,
Yeah.
and I mean it's a good point you're raising, and we basically trading is a massive mind game. It's a huge mind game, and the thing that I draw from your question and your description about managing a trade, etc., is am I right in thinking you've not got a trade plan?
Um, I sort of do. Um, I mean, sort of, well, it depends what you mean exactly by trade plan. Like,
Well,
you know,
but
I
what
guess
I'm trying to get at is, particularly if you're day trading,
yeah,
if you're day trading, you've got to be very, very disciplined.
yeah.
very disciplined, and you got to know way before the markets are open exactly how you're going to engage the market, your position
Yeah.
size, the location of your stop loss, and your target. If you don't know anyone, you've got to know all of those, all the answers to those questions. And so you shouldn't be thinking about, whether you're going to jump out the trade, whether it's a runner, whether it's not a runner. It's all about how you specifically engage the market. So, for example, I love day trading. I've been day trading for a long time now, and oil and Dow are really volatile, and I love the volatility that these markets give. But they can bite your head off and eat your account up in no time, particularly if you're using futures market or just a lot of leverage. So you have to be you can be cool as a cucumber only if you're very specific about how you handle the markets. So you've got to take the emotion out of the market. You've got to be as cool as a cucumber. And you take the emotion out of the market by having very specific trade setups and stop losses.
You're saying if you've got the trade plan and a stop is very crucial. So you're saying you just execute the plan and you say, I'm not going to do anything. I'm going to let it stop out. And then I don't care if I get stopped out. I'll go do it again. So basically, that means you're assuming that this trading is just the probability. It's like tossing a coin 10 times. Even if you get, because they say, even if you got a 30% win rate, some of the greatest, most profitable traders have a 30% win rate, but the only reason because they success is because they run their profits even with a 30%. So you're saying what we're doing, that if you're just leaving your stop loss, even though a lot of your trades are going to get a stop loss, you're going to end up with a lot of losers. You shouldn't worry because this is just a probability game, and it's just a gamble, and you just gotta. So yeah, that is taking losses is quite hard. So, but you're just saying the way to take emotions. If you got a good plan and you've got a stop loss, just leave it. Don't look at the screen, and then come back and see what's happened. If you've hit your profit target or not, and go again. Just keep going again and again and again until.
I do the same thing every day and expect the same results.
So
it's as simple as that. I do the same. I'll repeat that because it's worth saying. I do the same thing every day and expect the same results. So I have a system. You can't trade without a system. You've got to have an edge over the market because you're competing. Every time you take a trade, there's somebody on the opposite side of your trade. It's a nil-sum game. There's a fixed number of futures contracts in the market. So if I'm buying a futures market and I'm risking $10 per contract per 1 cent move in oil, that's a lot of leverage. So I've got to really know what I think that market will do. It's not about, I'm not rolling a dice. Far from it. I'm not rolling a dice. I'm stacking the probabilities in my favor to the tune of 50, 60, 70%. I want to achieve, my goal is to achieve 65 to 70% success rate. And if anything less, I pull away and leave the markets alone for 24 hours. If I do not achieve that success rate in any one day. And that obviously goes for my swing trades, my investing as well. And so let me just show you something. Let me just call up, I've got a few trades here. Let me just call them up.
The thing with the stop loss is always using stop is, let's say you do 10 trades and 9 of them get stopped out. So you're saying you just feel nothing and you're gonna go and do the
No, no,
10.
no. So you're saying 9 out of 10 trades fail. It,
No, I'm
it,
saying if, I mean, because it's possible sometimes, because the markets are unpredictable.
if you're getting nine losses out of 10,
I'm not. I'm just saying,
okay.
in just assume that when you put a stop loss, um, it just gets hit. But I know a lot of traders says you shouldn't worry because maybe that tenth trade will be a winner, and maybe the profit target will, make up for all the losses, and it's possible that's how traders make money. But you're saying that your system assures like 50-60%.
I'm looking for a good 65,
Yeah.
65% success rate minimum. And like I said, I think a success. What is a successful trader? What's the difference between a successful trader and somebody who breaks even or somebody who makes a loss? The difference between a successful trader and anything lower than a successful trader is they, in most cases, they will not be trading with a system.
Right.
I have a very, very specific system that incorporates all the basic risk management of position sizing and stop loss management and trade management. And that's why every time I take a trade, every single time I take a trade, I've been trading for a very, very long time. I've taken thousands and thousands of trade. Every time I take a trade, I still have the same fear of loss. I don't lose that just because I've taken thousands of trades. I still, the point in which I engage the market, I'm counterintuitive. For example, if I'm going short, I'm selling at the point in which the market has risen, and vice versa. We all know that. We all know the basics of trading, but the only way you can do that successfully is to be very, very specific about why you are taking that trade. I have to be able to tick at least 4 or 5 boxes of my little checklist before I take a trade, and even then, I will still have a fear of losing that money because I'm using a lot of leverage. I've just flicked through a few charts here. Oh, there we are. I've got a 588 loss on this one. What was I doing? I can't remember that trade now. So yeah, I got it wrong on that one, but there are some other. This is a what is that? Oh, this is gold on 20. Oh, this is an old trade. This is gold off of the 1620. Wow. That, if you look at the weekly charts, this was the major pivot low on gold, 1620. So I'm buying, if I'm using 60 quid a point, looking for 1.5 grand on a 25 pip move. Where's some oil trades? Let's have a look at some oil trades. Must have some oil in somewhere. Well, this is a 1,800 move on the Nasdaq. By the time I entered this trade, there's the big 1, 2, 3 push higher into that resistance. Then you get a 1, 2, 3 wave pullback into this huge level of support. That's my entry. That blue line is the live account entry. 20 quid a point. But that was resistance here and here at that point. But we had this big breakup, and it comes right now. That's support. So I bought that support. My stop was, I think my stop must have been under here. I can't remember now. Normally, I don't know why it's not showing my stop. It normally shows my stop loss. It must be there somewhere. I know what's happened. Because I got a decent amount of profit in there. I think I've moved my stop loss up to break even. And I would have been looking to take that off at that point there. But yeah, I mean, I think what you're getting at is the point I'm trying to make, and what I'm sensing from you is, you haven't got a very specific mechanism for engaging the market. In other words, what's going to take you into a trade? I've got I've got a system that involves me ticking 4 or 5 boxes before I take any one single trade. I will take trades with lower box ticking if I think there is sufficient justification in what I call an anchor chart.
I think I've got everything, maybe just not the stop loss. I mean, what do you say to people who don't use stop loss?
I think it's dangerous. If you've got, I was some years ago, I was trading with a guy. We were trading buddies. We would sort of go online every day, and he'd talk about what he was trading. And we were just, trading boring. So we were talking about what we were looking for in the markets, and we were talking about trades we were taking. I was long the gold. One day we were trading. I was long gold, and he was long oil. And there was this is back in the 07-08 crisis. That shows you how long we've been trading. I think it must have been about 07. In 07, there was an emergency rate cut. The gold shot up, and I made $2,000 in the blink of an eye, and he lost $2,000. Gold went one way and oil went the other. And it went so fast because it was the algorithms broke through the markets really quickly. So I mean, but his stop loss got him out quicker than it would have done otherwise he could have been 4 or 5 grand out of pocket. But yeah, you got to expect the unexpected and going.
Oh, so he did have a stop loss.
I never trade without a stop loss, never.
Oh no, you're saying your friend, he got.
Oh, he had a stop loss, but sorry, that's a bad example, because that particular day the markets moved so fast, the algorithms kicked in so fast, it went through his stop loss, and he got a lot of what's called slippage.
Yeah.
But here, if you look at this trade here, that's my stop there. So this is a Nasdaq trade in November.
Yeah.
£20 a point. I've got 3.5 grand on the account. And I'm risking 700 pips. Now this is where I would have started the trade off with a stop. So I'd be risking £700 for 5 grand. Now whether or not I doubt very much if I waited for that level. If I've got 3.5 grand on the books, I'm not going to sit there and give that back when we're hitting resistance. I suspect I took this off. I took the screenshot and then took the trade off. I suspect. In fact, I'm all 99.9% certain that's what I would have done. So I put the limit order up there just in case it shoots up there. Every now and again, the markets will shoot and you'll get hit, and I'll get taken out for 5 grand. Well, I'll be in profit for 5 grand. But look, I've got 3.5 grand on the books, and I've still not moved my stop loss. The reason why I've done that is because on another day I might have moved the stop up, but on this particular day I've just left it. But you've got to go into these markets with risk management. I cannot perceive how I could take a trade without having a stop and exercising full risk management, particularly at £20 a point. And if that starts really shooting through that stop, then I just got to clear the decks and get out. And I don't want to hang around if it's going to break that support. Why do you trade without a stop? Let me turn this around and say to you, why do you trade without a stop?
I was just going to say, well, I don't know. I've got a feeling it might not be correct, but I've sort of observed a lot of positions that after they go into loss, they sort of, a lot of times they do come back even to break even, if not slightly higher. I'm just thinking, if I'd used the stop, I would have got stopped out of so many trade. But because I didn't use it, I always had the chance to close it at break even or a small profit. So, but I haven't got numbers to prove the percentages, but it's just a feeling, it's something that's gone into my head and I believe that. But it may be correct, it might not be correct. But I
I think
suppose
that,
what you would say is that if that happens all the time, there's always one time, as you said, that there might be a big move and it might not correct itself at all, and then you're going to use a lot of your, you're going to blow up your account and that sort of thing. That's correct as well. But yeah, that was the reason.
I don't think you go into a market thinking like that.
Mm.
I go into market thinking that's my entry, that's where I'm going to put my stop. If that stop gets hit, then I'm wrong and I'm out. Simple as that. Because what you're describing is a discretionary way of trading, and I don't think there isn't any room for discretion in trading. I think you've got to identify where your stop needs to be and stick to it. If you go into a market saying, well, I think that might be all right, it might dip there, but I'm sure I'll be all right. That's pure, that's not trading to a system. That's pure discretionary trading, and every single trade you take is going to be in danger of taking too big a slice out of your account. This is why, so if the statistics are high, aren't they? If you, I've got an account with IG. Every time I log into IG, it tells me that 77% of their customers lose money.
Yeah, I know.
So, but those 77%, a lot of them are either haven't got stops or don't know how to. Maybe a lot of them do use stops, but have their stops too close. So are they using too big a position size and fearful of having a wider stop, or are they just not bought at a good entry level and having to risk a bigger stop and damaging their account by having a bigger stop?
That's what puts you off stops, because you think to get the right stop level right, if it's too big, your stops, your losses will be too much, and then if it's too little, you will get stopped at so often. That's another reason why not to have stops. But
it all comes back to what I started by saying. You've got to have a system.
So stop is a big part of the system, you're saying?
It's an essential part of my system.
Yeah, essential.
The most important parts of my system is the actual trade setup.
Yeah.
What are the decisions I'm going to make before I take a trade? That's the most crucial thing. But the very next important point is, where should my stop be? I want to stay in the trade, but I want to get out of it if I'm wrong.
I mean, when it comes down to it, I suppose the whole trading markets, it's I mean, you say you want to get an edge over everyone else, but everything is chance, really. I mean, you can have a sort of informed guess when it's going, but there's always chance that even with the system, you might not make that much money anyway. So it's all chance. A lot of it is chance, because you think you've got an educated guess because you know the market conditions and support and resistance, and it might go in your favor, but you might not make a lot of money, and it's still a gamble. I mean, at the end of it, I mean, still every market is a gamble. I mean, unless you're investing long term for 10, 20 years. I mean, same dynamics apply, but that's why Warren Buffett got so much money, right? Because he's a long-term investor. But
I think that the very language you're using suggests to me that that you've not got a clear strategy. I mean, you talk about, guess it. Yeah, yeah, but trading is a business to me. Let me try and come at this from a slightly different angle. Trading is a business to me. And if you want to be a professional, you've got to treat it as a business. Now, the business model I use is exactly the same business model as the insurance industry. Every time they issue 100 motor policies, they insure 100 drivers, and they know to a very tight percentage what percentage of those drivers are likely to make a claim. They know that, so they adjust the levels of premium to that risk, and they issue policies to try and limit that risk. But the insurance industry is based on probability. And that is exactly the same business model as trading. When I trade on the basis that 3, 4 or more out of every 10 trades will fail. But the losses I make on those trades that do go against me, when the market does go against me, is far outstripped by the trades that are successful. And unless you come into the market with a very specific system that copes with losses.
Do you think your system assures that you only use 3 or 4 out of 10 trades?
Yeah.
But I'm just thinking that, I mean, that can't be right, because the markets are totally unpredictable. You could lose.
I completely disagree with that. Completely disagree.
I mean, you can't always say it's always going to lose only 3 or 4 out of 10.
I completely disagree with that statement.
How?
Completely.
Well, how? Why?
Because the markets are not completely unpredictable. If they were, I would stop trading tomorrow.
I mean, okay, completely unpredictable is not the right word. Maybe I should say it's just everything is a gamble. It's a lot of
It's if
I was going to.
That's just I'm not making headway with you somehow. I've
sorry.
talked about this business model. I've talked about this business model that I use.
Yeah.
Every professional. There are a lot of professional people out there who make a lot of money. Why? Because they put a lot. I've put thousands of hours into this to not just. I didn't take thousands of hours to design the system, but I've taken hundreds and hundreds and thousands of hours to test it as time has gone on, once I've set it up. And very occasionally I refine it. It's very rare I actually refine it. But my system is so good, it's highly predictable. I'm taking highly predictive trades.
Yeah.
I'm not saying I'm some genius. I'm not saying I'm some brilliant trader. I've just worked very, very hard to ask myself, how do these markets work? What are the most common patterns? What are the best entries? And when should I stop trading? And that final point is probably the most important. When should I stop trading? Because a lot of day traders overtrade, take way too many trades. They let their losses run, and they cut their runners short, and they don't make any money, and they kill their accounts.
And all that is
you have to go into trading with a method of having more successful trades than losers.
Yeah. So how do you day trade, right?
Yes.
How often?
I trade most 4 or 5 days a week. I'm normally trading every day of the week.
And how much time do you spend per day?
Over what period do I normally trade? Am I live trading?
Yeah, you said like 4 or 5 times a week. So
yeah, I trade the US Open. Yeah,
right.
The Dow opens at 2:30 p.m. UK time.
Yeah.
So I measure the open period. Oil tends to, the volume comes into oil at 2 p.m. UK time, and the Dow cash market opens at 2:30
Yeah.
p.m. UK time.
Yeah.
So I like to trade the oil, and I trade the Dow at the open, and I quite often trade the close as well. I just don't trade the what's called the doldrums and the chop that you tend to get in the middle of that. Those the open and the close.
So you mean, so you spend like what, an hour
I
sort of?
spend on average I prep for at least an hour a day before the markets open and go through some mental exercises um, in preparation for the open. I normally trade the first 90 minutes, take profits, and either come back for the close or just shut down.
Do you scalp?
I intraday trade, I don't scalp. The
Hmm.
pure technical definition of scalping is a lot of people go after, particularly if they're trading the euro or the pound, they'll sort of go for sort of 10, 20 pips. I'm not interested in that.
Hmm.
I'm looking for an intraday move, not an intraday scalp. So I'm looking for the direction of the day, not a little sort of chip of the market. I'm looking for the direction in the day. But I teach my system. I mean, if you want to come on at the next program,
Yeah.
I'll send you the details
I,
about the program.
I think, the algo trading, I think why algo trading is so popular is because machines don't have emotions. That's one reason. And also they only do go on, I mean, they scalp, don't they? Algo machines, they only scalp.
Um, yeah, I don't know the ins and outs. I don't know quite what they do,
That's why all the institutions,
but you're
everyone,
right. It's got you got. I mean, you started off by talking about you asking me about the emotions,
yeah,
and everything you've talked about, you you can take back to the emotion in trading.
yeah.
It's counterintuitive. Um, the point, and so like I said, every single trade I take, I assume I'm going to make a loss, but I am totally prepared and set up to take that trade and committed to that trade once it meets certain criteria, and I will stick to that trade and I will commit to it. And I will not move my stop loss. And if I get stopped out, I will more than likely walk away from the market, or at least potentially flip it if I think I've got the direction wrong, and I can profit from the direction that the market is actually going in. But a lot of the time, I'll walk away from that particular market. But
So you
the
said,
only way you can make a profit is to have a system. And so
yeah.
if you're very, very committed and you really want to be a good day trader, you need to
Yeah.
come on my program.
So you don't want to scalp for short moves, but I just think scalping, it's the reason why I like scalping is just, well, number one, it's easier. Number two, I think it may well have less risk, and I
When you
think
say
everyone,
scalping, what are you looking for? What do you trade? Euro, Dow?
let's
What do you
say
trade?
Dow.
Right. When
Yeah.
you scalp, how many pips do you look for?
I mean, I might put on, I go maybe long or short 1 pound a point Dow. And as soon as I even like look at the maybe like 10-second chart, as soon as it goes up 5 or 10 pips, I just close it. And if I do 10 of those and I've got £200 a day, that's not bad. I'll just,
Hmm. And
but I suppose,
how often do you hit your target at £200 a day?
uh, I think if I'm in the right mood, um, I think, and the market's volatile, which they normally are with the Dow, um, I think I can do it any day. I think I can do it any day, but sometimes I just don't want to trade. Some days, I'm not in the mood. But I think I think that's very achievable. £100 to £200 every day, which is not bad.
And but you say you're going after about 10, 20 pips a time.
Yeah, or even less than 10, less than that. But
Wow.
if you do,
Have you got a spread betting account or a futures account?
yeah,
Or
spread, yeah, spread betting.
wow. But I mean, the spreads on the Dow are what, two pips?
2.4, yeah, I think 2.3, 2.4.
Wow.
Why you say what? Wow.
That seems like seems like really hard work to me.
Hard work. Why?
Hard work. Well, on an average 90-minute period on the Dow Open, even on a quiet day, you've got to be looking at 150 pip range, and you're going after 10, 20 pips.
No, when you say pips, I think under Dow, it's I think it's probably maybe more under Dow, isn't it? Because Dow is like
Yeah. Listen, if you're making 200 quid a day and you're consistently making 200 quid a day, keep doing it and don't stop.
Yeah.
If you're able to go in the market and grab 200 quid a day, then just go for it. Keep doing it. But
You think that's good?
That's very different from my style of trading.
But I think anyone could do that. I mean, even probably a child could do that. It's not that hard to do. Scalping, really.
Yeah. Yeah.
But
Well, I mean, yeah.
yeah, it may involve
All
a
right.
lot
Well,
of time. Yeah.
But by all means, drop me a line from either Telegram or whatever if you want to sort of talk any further about my program. But yeah, like I said, if you can make a profit out of 10, 20 pips a go, then great, go for it. But that's very different. I think that 10, 20 pips to me in the Dow is it's not worth getting out of bed for. Personally, I wouldn't get out of bed for 10, 20 pips in the Dow.
But isn't that what I think that's what algos do? They just go on very small, like
yeah. I mean,
less than a
I'm
pip,
not saying it's
and they're
wrong.
very
I
profitable.
know a lot of people who well, I'm aware that people do go for very small moves. Absolutely nothing wrong with it. I don't have any, like I said, as if anybody can do that and make a consistent profit, then don't stop. All I'm saying is I think it's very hard. I would personally find that hard work and limiting. I would find that quite limiting, just going after 10, 20 pips per. And how many trades a day would you make? You'd make 10, 20, 30 trades a day, would you?
Yeah.
Wow. Your broker must love you.
Why I mean, how many, if you close £1 a point in the Dow, how many do they make, like, from every £1?
Well, they're not making a lot, but if you're firing off 20, 30 plus trades a day, that does not add up over a week.
If I mean £1 a pound, £1 a point trade, that's not a very big position, is it? On the Dow.
No. It's a small it's a small position. I just think if you've got a market that is moving, I mean, the average open range of the Dow, on an average day is well over 100 pips on just the open range.
Yeah.
So I wouldn't.
You could just go long
I
before
would
the
never
open.
personally go after a 20 pip move.
Yeah. No, it does normally. The Dow.
The open moves I go for are a minimum 100 pips, minimum.
Yeah. But then if you go £1 a point long at the open and just capture 100 points, and we've made £100, which is not bad. I mean, you could just do that, and then that would be great. Yeah. But sometimes it drops as well.
By my book, you should be making a couple hundred quid on £1 a point within the first 30, 45 minutes on one or two trades, not 10, 20, 30 plus trades.
Well, I mean,
how long do you look at the Dow for?
Well, it just that's the thing. I mean, I don't want to do it. Sometimes I have ended up looking at it for a long time, but not trending all the time, which is what I don't like, to spend a lot of time just looking at the screen all day. But
I
I
mean,
want to
are you
reduce.
sitting at your screen? Are you staring at the charts for what, 2-3 hours or more?
Sometimes more, but I don't have to. I mean, it's just, yeah, at least 2-3 hours.
I think that good momentum markets like the Dow and the oil move in very measured moves that are very easy to predict. I asked myself that when I started day trading, I asked myself one question: if these markets are dominated by algorithms, how are these algorithms being programmed? That's the one question in my head I asked a long time ago, and I worked it out. All the hours I spent developing my system was about answering that question. Who is programming these algorithms and how are they programming them? Because that's the whole point of algorithms, isn't it? The whole point of algorithms is they are making all sorts of equations, because the whole point of an algorithm is to be highly predictive. So how are these algorithms programmed to achieve those predictive levels? And there is what I call a code of trading. These algorithms use a very specific code, and I've unraveled it. And I'm not talking about computer code. I'm talking about pattern of behavior.
I mean, the way they make someone that uses algo trading, they make money is just, they probably just go long and then they close it after nanosecond, right?
No. I think a typical algorithm would most of the measured moves in the Dow are at least over sort of a 10, 15, 30-minute period. Unless you're talking very volatile period times when there's a lot of data coming out. I mean, I'm blimey, the last Fed day, I can't remember the points now. I think the last Fed day was very volatile, wasn't it?
Yeah.
I think the Dow moved on the Fed day itself. I think the Dow moved about 1,000 pips on the last Fed day, didn't it? From memory.
Yeah, FOMS MC, it was like.
I've seen the Dow move. I've seen these algorithms do 5, 6, 7, 800 pips in a blink of an eye.
Yeah.
But that you do not want to be in the market when that's going on.
Yeah, I just think
I'm going to run now, but it's been.
Oh, sorry.
Thanks a lot for your questions, because it's been very interesting listening to your questions and hear you try.
Do you do in-person meets for this group, or?
Yeah, I am going to, yes. I haven't done it for a while, obviously for obvious reasons with COVID, etc. But in 2023, last time I did them, I had a venue just around the back of London Bridge Station.
All right.
Is that anywhere near you?
Yeah, I'm in London.
Well, I think I'll probably resurrect those in the coming weeks and set up some sessions at that venue I had at the back of London Bridge Station. So watch out for those, and
or if, I mean, it's easier to talk on the online. I mean, if you could do more of that, it would be great. I mean, it's always good to have someone to share your thoughts with. Than just. So what sort of things do you offer?
Have a great week. Thanks. Like I said, thanks for it's very useful when people ask questions like that.
Do you have a live trading room, or?
Yes, I do. Yeah, I open the trading room at 2:15 every day.
Right.
That's all. If you come on the program, you automatically go in my trading room.
Okay, and the link is in the Telegram channel.
Well, if you need to find out about the program, I'll send you the link to the program now. In fact,
okay.
I should have done that in previous session though. Right, here's the link to the program. So if you scroll down, you'll see it talks about what's included in the program, the strategies. I talk about the golden anchor system and so on. But if you, I've got to run now. But if you want to have a chat about it, then by all means, drop me a line from the website.
Yeah.
And anybody else wants to find out more, I will let you do that. I do a day trading talk. I've got a day trading talk lined up for tomorrow evening, haven't I? Let me send you a link to the day trading sessions. This is the Zoom link for tomorrow's day trading. Good. Yeah, drop me a line. You know, if you're interested and you want to talk more, then drop me a line.
Yeah. Yeah, it's always better to like audio chat. I think prefer that one.
Yeah.
So drop your line on the how, like email or what?
Well, the on the website there is where is it? Let me send you a link to the contact page. Yeah, if you look on this contact page, my mobile number's on there. I use WhatsApp a lot, or WhatsApp or Telegram.
Oh, so you can call you and speak
So
to
you
you
can just drop me a line if you want to. If you want to chat, drop me a line on WhatsApp or Telegram, and let me know what's a good time for you.
Oh, we can just talk on the phone.
Yeah.
Oh, great.
All right.
Okay.
Brilliant. Thanks again. And yeah, if you're around tomorrow, then stop in on that Zoom for tomorrow. So
I think New Year. Sorry, before you go, I don't want to take your time real quick. I think normally what happens is they say, oh, all the traders come back from holidays, and there's always a big pop, isn't it? Like, but I think last year the Dow peaked on was it the 1st or 2nd of June, and then it went down 2022, the start of 2022. I think it peaked at 1st or 2nd of June, and then kept going down ever since till I think October, whatever, when we just had a small. So I don't know. So we peaked at the start of last year, but I don't know. So it's just that overnight it'll probably get high. I think that will probably go up by, I don't know, 200, 300 points, and then by the open it always comes down to the lows of the previous session, or like the open of Friday's close or whatever. It just comes down, isn't it? So anyway, well, I've got to run, but let's just see what happens when they open tomorrow. Yeah. All right. Let's have a look. Brilliant. All right. Thanks very much for your time. I hope you all others found that useful, and yeah, look out for the next sessions. Just wonder, how long have you had? You see that? It's gone. How long have what? Sorry. How long have you had these your sort of trading rooms and? I opened the trading room up in about 2009. Okay. I've been investing for about 40 plus years, but I started day trading in 05, 06. That's when you started to offer your services to others? Yes. 2006. All right. Yes, to the whole wide world. Yeah. Okay. Did you have like a insurance background? Because you were talking about. Yes, I used to. When I left school, I had what's called a Lloyd's ticket. I worked on the Lloyd's trading floor. Right. Okay. What under London Stock Exchange? Under what? Sorry. London Stock Exchange. No. This was the insurance trading floor, not the stock exchange. Right. Well, way back in the beginning of my working life. Yeah. Okay. Do they still exist, the insurance stock exchange, or do they? You know what? I'm so long out of it. I can't answer that. I've lost touch with it. Okay. Brilliant. All right. I'll talk to you soon. Okay. Cheers. Bye. Bye.